Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our banner story. Optimism among Philippine chief executive officers has improved, with 63% of 131 CEOs expressing confidence on revenue growth for the next 12 months. Now, the results of the mid-year survey by PwC Philippines Management Association of the Philippines was higher than last year's 59%. PwC Philippines said CEO confidence could be attributed to business adjustments towards the end of last year when the organizations were able to adjust their strategies and operations much quicker. PwC said CEOs took a more conservative approach in the middle of last year due to uncertainties brought by the pandemic, but PwC noted that most CEOs who answered the survey are from large corporations that have more cash runway, while majority of Philippine firms are, of course, MSMEs. More than 62% of survey respondents were from large firms. 85% of all of the 131 CEOs surveyed are confident about revenue growth over the next 3 years, while 70% said they are optimistic about Philippine economic recovery also within the next 3 years. 28% believe recovery will happen in 2 years' time. Meanwhile, a separate survey by market research firm Ipsos in June showed an improvement in the economic outlook among consumers. More than half, or 51% of Filipino respondents, described the current economic situation to be either very good or somewhat good, a huge jump from the 26% which was recorded in February. Now, the health department has confirmed local transmission of the Delta variant here in the Philippines. The agency found out that the recent clusters of Delta variant cases were linked to other local cases. This comes just one day after the government reported 12 new local cases of the highly infectious variant that pushed the country's Delta caseload to 47. To combat another possible surge in nationwide cases due to these local transmissions, the government is scrambling to fast-track the vaccination of Filipinos. Just this morning, another million doses of Sinovac arrived at the NAIA. The Philippines has so far received 17 million doses of the China-made jab. But vaccine czar Carlito Galvez Jr. says vaccination is not the only way to avert a possible surge in cases. He said minimum health standards must be strictly observed, adding that no one should feel comfortable going out without masks until everyone has received their COVID-19 shots. But guys, masks off may be a very far-flung reality, at least here in Asia. Let's do a very quick virus check around the globe before we end this trading week. Let's kick off with, the map here. We can see that's a heat map of Bloomberg of the changes in vaccination all across the globe in the past 14 days. You can see several black spots here, meaning that the percentage change in vaccination pace in the past 14 years has not been as bright, let's say, as the ones in very bright green. Now, you can see also here the caseloads. Definitely, the changes are very different from the number of cases. So you can see that in the United States, there's still above 34 million cases per day. But, in terms of the day change, it's actually quite low. It's just 1%. Now, recall that we are looking very closely into what is happening into Asia as this variant, of course, is spreading. And one issue is the travel bubbles. Is it ever gonna happen? Now, the travel link between Singapore and Hong Kong has never even gotten underway. There were talks between Australia and Singapore. Those are still ongoing. Australia and New Zealand has been stop-start at best. Now, there is a poll by flight tracking firm OAG. They found about half of respondents of the poll think a travel recovery in Asia will only happen by July 2022. That's still 1 year away. And this, according to a chief analyst over there, John Grant, he said that is verging on the optimistic. Asia's a real worry. Summer 2023 is the more likely realistic assessment. However, over in Europe, you can actually see that the number of travelers from US to Greece, Spain, and Italy tripled over the past 2 months. But still in Asia, as mentioned, we are under a lot of lockdowns. But it's not just the rate of inoculation. That is the question here. You can see here on my terminal the differences in higher places in greater rates of vaccination versus the overseas travel. One major issue is also from an article in Bloomberg. There are two paths, they say, that are emerging. Now, in countries such as Israel, even if they have new COVID cases, these cases are declining as the vaccinations spread. But you've got other places like Seychelles, which has fully inoculated most of its population than any other nation, but the infections continue to increase or even reach new highs. And they are saying that the reason for this may be the difference in the type of vaccines. Evidence from the global rollout is saying that the messenger RNA shots, which are of course developed by Moderna and Pfizer and BioNTech, are better at stopping people from becoming contagious. This reduces onward transmission. The other vaccines available are effective in preventing acute illness or death, but appear not to prevent the onward transmission. Now, this according to Nikolai Petrovsky, he's a professor at the College of Medicine and Public Health. The use of any vaccine is still better than nothing, but some doses may have little benefit in preventing the spread. Why is this important? He says the type of the vaccine in a country could affect everything from the policies about mask wearing and social distancing, and very importantly, lifting the border restrictions and reviving economies. Now, let's take a look at our index here and how we are opening. It does seem to be a continued slide here. We are at 6,562. That's down by 0.2% this morning. Now, you see that yesterday we did climb the most in 7 weeks. That was after, banks rallied after 4 days of having been sold off. They had, we had hit an 8-year low, but BPI topped the estimates there, and that's what, according to Andre Soriano at AP Securities, is saying that that's what led to this rally in the banks. But he does point out it's hard to say that the sell-off is over. This recent sell-off was quite sharp and attracted bargain hunting. Now, here to chat with us about the current state of the markets as we end the trading week, we have with us Beatrice Lopez of Regina Cap. Good morning, Bea, and welcome to the broadcast. Hi, Bea. Let's kick off with the issue of the Delta variant here. Of course, this will be a slower recovery than as usual if we take a look at what's going on all around Asia. Can you say that the risks that we are seeing have already been priced in, but or if not, how much lower is the downside risks here for our index?
Well, generally, I believe that investors for a long time have already realized that sustained recovery of the economy hinges on the pandemic response. Now, of course, it's natural that there would be some fears as new variants of the COVID start popping up, and especially knowing that Delta is a severely more infectious strain than the others. But nevertheless, something that I see could possibly cap the fears rather is that seeing how much the vaccines would be effective, especially with the kinds of vaccines that we have. Like you said earlier, the type of vaccine would impact the recovery and the reopening of borders. And moreover, data also suggests that vaccinated individuals suffer from less severe cases of the Delta variant, if they're infected. So that could be something that would offset the fears that the Delta variant would possibly stall economic recovery again.
Okay. But yeah, the sector that has been in focus this entire week has been financials. It's been so topsy-turvy. And if you look at my terminal, they're again, the worst performer, down by 1 and 0.2% after having staged quite a recovery yesterday. And then before that, it was sold off because of that Fitch downgrade. What's the deal here? That downgraded outlook, but then you've also got BPI, which seems to have, surprised in terms of second quarter earnings.
Well, the financial sector would be heavily scrutinized, I believe, since banks are a good gauge of how the economy is performing so far. Looking at BPI's earnings, for example, which was released yesterday, we see that loan demand for that bank remains tepid compared to the pre-pandemic levels. And the BSP data also shows that the sector collectively has experienced a decline in loans. And that's something that has been decelerate. We've seen it decelerate since, I believe, December of last year. So the moving parts right now is still how the pandemic is progressing, especially in our country.
Okay, let's talk about the BPI earnings. It was, of course, the basis of the growth was the provisions were cut in compared to last year at least, but also the growth was led by fees and commissions rather than net interest income. There's still quite some loan growth, low loan growth. Why are people okay with this, and why were the markets still happy with this?
Well, one possible explanation would be that the opportunistic nature of the non-interest income or the flow business is already was already enough to offset the weakness in the core business, and that's what I can say is possibly a silver lining, since we have been expecting that loan demand would likely remain challenged over the next couple of quarters, especially since the pandemic is still putting a lot of things up in the air right now. There are plenty of moving targets in terms of economic growth, the expansion of businesses, which also plays a factor in the demand for loans.
Okay, can you say the same is true for the rest of the banks, or is BPI a specific case? You've also got some comments from Finance Secretary that there might be a triple R cut looming, and also Governor Diokno saying that they will remain accommodative when it comes to monetary policy. But then it doesn't naman seem to really be spilling over into loan growth. Can you explain it? Is this your outlook for the entire industry, or is this again specific to BPI that they were able to do this fees and non interest income quite well in the first half of the year?
Okay, well, like I've mentioned, the flow business is very opportunistic in nature. It isn't as easy, I guess, for a lack of a better term. It's not as easy to forecast, since it hinges on several factors, and unlike the core business, which measures mostly the demand for loans. And for the financial sector as a whole, we do expect some weakness still from loans, since there are also other banks that are very prudent in terms of lending. So the requirements are stricter now, and also there are other companies who are not keen on uh, tapping the banks for their working capital and and other capex requirements.
But yeah, when you compare the bigger banks, the big three, compared to the smaller ones, second liners, if you will, which ones are you more excited about? We've also got Union Bank in the news right now. IFC is investing $150 million in their 7-year social bond. Of course, we have that big deal of Mitsui in RCBC. Does this change the dynamics for you?
Well, overall, in terms of fundamentals, I think the banks with a higher concentration of corporate loans would likely face less severe challenges in terms of recovery and seeing their loan demand pick up again, since it would be easier for corporate borrowers to restructure their loans, and have they also seem to not contribute as much to NPL formation, which would likely result in a positive sentiment for the lenders themselves. So it
Okay,
would be more on corporate lenders.
okay, so let's take a very quick always look at the corporate lending side. Let's take a look at the exporters here, which had also jumped yesterday. We've got agri nurture up by 4.6% yesterday. Just a quick peek at them now. It continues to rise. It's now at 6 pesos and 10 centavos after having slid. Tell us, is this VAT issue, it's still of course a review on a regulation that they might be exempting the ones that were previously exempted already. Is this a knee-jerk reaction, or is this going to dramatically change the game when it comes for exporters, AgriNurture, DNL, IMI, Emperador, and the likes?
Well, right now that is still under review. So the unless it is certified as urgent by the lawmakers, there would be some time before some legwork starts to materialize. In terms of their price appreciation yesterday, I think that a lot of the stocks have been on a downtrend for quite some time now, and some investors are likely just picking up very attractive buying opportunities. Especially yesterday, a lot of the stocks were sold down, and which resulted in their technicals being on the oversold territories, which is usually a sign that it could be a good time to position.
Okay, so there's actually a lot of bargain hunting happening here. And just before we let you go, Bea, how do you see the rest of the trading day? We're waiting on bated breath to see whether we will stay above the 6,500 levels. It's been such a crazy, tumultuous week. Where do you see this veering towards in terms of sentiment?
Well, generally, we are still putting our strong support at the 6.5, 6.4 level for the near term. A big factor would be the earnings season. It's starting to roll in with BPI, of course, kicking it off yesterday. There are also a couple of big names and second liners coming in over the next few weeks, and their results would, I believe, heavily influence how the market would move, especially since most of the time the catalysts for the market have has been the economic data and the uh, progression of the virus. So the earning season is a fresh catalyst for the investors.
And which ones are you looking forward to, Bea? Which ones do you think might surprise?
Well, top of mind, the companies that would be releasing over the next 1 to 2 weeks is also another bank, Metro Bank, and then a Conglo, Aboitiz Equity, I believe, is next Friday, and also infra firm Wilcon would be releasing also sometime next week. So those are the ones that we are waiting on for now.
Okay, so waiting on, but we don't know yet whether they will be positively or negatively surprised us. Thank you so much for those insights, Bea Lopez of Regina Capital. Here are other headlines we're watching this Friday morning. The railway project that will connect Tondo, Manila to Calamba, Laguna attracted a record 34 bids, which came from 17 foreign and 6 local companies. The Transportation Department and PNR said the firm submitted 34 bids for 6 contract packages for the construction of the 11-station PNR Calamba project. Now, among the international companies that submitted bids, 7 were from South Korea, 3 were from Indonesia, while the others are based in Japan, China, Spain, Turkey, Thailand, and Hong Kong. Meanwhile, the 6 local firms that put up bids were DM Consulhi, EEI Corp, First Balfour, Prime Metro BMD, Megawide, and Santa Clara International. The Bangko Sentral is planning to add a Braille feature to our banknotes for the benefit of around 2.5 million visually impaired Filipinos. In July of last year, the BSP already introduced enhanced tactile marks in Philippine banknotes to aid the elderly and the visually impaired in differentiating the denominations. BSP Governor Ben Diokno said the BSP will continue to engage the sector so they can better respond to the needs of PWDs. Now, in line with this, BSP Deputy Governor Chuchi Fonacher cautioned against discriminatory practices such as requiring visually impaired clients to open only joint accounts. And that's a first look into the business day. Today's Friday, July 23, 2021. Catch Business World Live for the market close. That's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.